Welcome to another video in our Taking Care of Business series. In this video, I'm going to examine the finance options available to you when you're looking to finance a car, ute, machine, or piece of plant and equipment. To keep things simple, in this video I will refer to financing a car, but the guidelines apply equally to utes, trucks, machinery and equipment. There are a number of different ways to finance the purchase of your car, including lease, chattel mortgage and commercial hire purchase. Each of these options have different accounting, tax, GST and FBT implications. Let's examine the two most popular finance methods, starting with a lease. Under a lease agreement, the lessor retains ownership of the vehicle, while you, as the lessee, assume the risk for the payout amount, also known as the residual. The amount you finance excludes the GST component of the purchase price, which the financier claims back as the owner of the car. Under a finance lease, you pay the lease rental but don't obtain ownership or equity in the car. Your monthly lease rental and residual payout value are subject to GST, while you are responsible for all the car's running costs. At the end of the lease, you as the lessee have the option of 1. Paying out the residual amount and taking ownership of the vehicle, 2. Refinancing the residual amount for a further term, or 3. Returning the vehicle to the lessor and paying the shortfall between the value and the residual amount. A finance lease allows the lessee to select a lease term with repayments to suit their cash flow. Also, lease rentals and residual values can be negotiated within a range set out under tax office guidelines. Generally speaking, your lease rental will be tax deductible to the extent the car is used for business purposes, and you also need to take into account whether the cost price of the vehicle exceeds the luxury car price limit. The other popular finance option for business owners is a chattel mortgage. With a chattel mortgage, you become the owner of the car while the financier secures a charge over the asset. As the owner of the car, you can obtain a tax deduction for the depreciation on the vehicle plus the interest component of the repayments. If you operate on a cash base for GST, you can also claim back the full GST component of the purchase price on your next BAS statement. You can choose to finance the total purchase price or use a deposit or trade-in to reduce the loan amount and monthly repayments. You can even structure the finance to pay back the GST component several months into the loan agreement, which effectively reduces the outstanding loan and the total interest you will pay over the term of the chattel mortgage. Other benefits of a chattel mortgage include 1. The repayments are fixed over the term of the loan that ranges from 12 to 60 months. 2. You can structure the repayments with or without a balloon payment at the end of the loan term to suit your cash flow. And 3. There is no GST payable on the balloon payment, if any, at the end of the contract. So there is a brief rundown on the two most common forms of finance in this country, lease and chattel mortgage. While our role includes the provision of tax-effective advice, we can also help you save money. Firstly, as a client, you have access to wholesale rates of finance through an affiliate finance group. Secondly, this group also gives you access to fleet pricing on new cars and high commercial vans that could save you thousands of dollars. Finally, if you're looking to finance a car, van, truck, machine or piece of equipment, contact us today. You'll get advice on the most tax-effective finance option to use, a free finance quote and access to fleet pricing on your new vehicle. Until next time.